Welcome back to another video. Today we're going to take a look at the NASDAQ 100 as well as the yield curve from a technical and fundamental perspective. Now, if you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And as always, if you are new to the channel, a sub would be appreciated as well. And let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, starting here on the monthly time frame with the NASDAQ 100, the market is clearly going to close below this structure because today is the 28th and the month is about to come to an end. Until something big happens, the NASDAQ will break above that level, but that's not going to happen at all. Okay, so this level of support is now broken and it's now become resistance, and we can definitely expect a continuation to the downside here on the NASDAQ 100. Now, from a weekly perspective, what do we have? The most recent structure that the market had created sitting at this level. Now, the market had also printed this massive impulse. After an impulse, you expect a correction, and the way you measure your correction is by taking your Fibonacci from the high to the low of the impulse. Now you can see how the market has got a big possibility of pulling back to the 0.382 before the continuation to the downside. One thing that we need to keep in mind is going on the daily time frame. And what is that? We can clearly see here that the market is now stuck within this consolidation phase. Now if we look left over here, you can see this level acted as a level of support. Now the market broke below that support, came back, tested it as resistance, and we can see how the market also created this structural here, and the market's now trapped between a level of resistance and a level of support from a technical perspective. If you look at the yield curve, now what is the job of the yield curves? Now most cases, analysts, the big guys, they use this yield curve to predict the next stock market crash as well as the recession that could potentially take place, because the yield curve predicted a 2008 a bubble where the market had crashed there as well. Now we're going to take a look at the yield curve and we're going to see if we can find anything from a technical perspective. On the monthly time frame, clearly we can see the market is testing very strong structure in the market. This level over here acted as a level of resistance. The market then broke above that resistance. All of that resistance is now turned support, and we can see how support is fighting. We can see how the yield curve is holding on to live support. Now if you look at the weekly time frame, what do we have over here? Now from a weekly perspective, we can see how the market had printed this structure from a weekly perspective, so we can definitely expect the market to pull back to that level. Once again, if you've got an impulse, you expect a correction, and if you take your Fibonacci there from the low to the high, we can see we've got a potential opportunity for the market to pull back to the 0.382 before the continuation to the downside. Now on the daily time frame, what can we see here? Now on the daily time frame, the most recent structure that the market had printed was this level over here. Overall, the market is stuck within a monthly consolidation phase, but that doesn't mean things are looking good. Now we can definitely expect this market to go and hit that level before the continuation to the downside. However, what I would like to see happen with the yield curve is going to be a close below this structure that we are testing here at the moment. If this structure does not hold and the market starts melting to the downside, then you can prepare yourself for something massive that is about to happen in the market. The US 30, Dow Jones, NASDAQ 100, all of them will be sent to the floor. Now that's my outlook for next week on the NASDAQ 100. Alternatively, as I always say, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. Now if we go and take a look at what the fundamental data says. Now firstly, we can see here this report from Zero Hedge. It says here Fed's favorite inflation indicator, highest in 38 years. Personal spending's dropped the most since February. Now why is personal spending so important? We have to remember that there is 6 massive companies that makes up majority of the NASDAQ. Number 1 is Apple. Apple weighs at 12.147. Microsoft second, they weigh at 10.468. Amazon weighs in at 6.586. Meta platform, Facebook, they weigh in at 4.855. Tesla is at 3.87, and then Google's Alphabet is at 3.816. Now the problem with that is all of them are electronical companies. So if people are not spending any money on buying or acquiring new products, then these companies are not going to do good at all. The personal income had slightly increased for the US dollar, but the spending has decreased. This article from the New York Times over here says inflation runs at its fastest pace since 1982. Now we can see here, okay, inflation came in strong and wage growth remained elevated at the end of 2021. Now the PMI data that we are going to get next month will give us a good indication of exactly if inflation had continued to go up as well. Now this article from Yahoo Finance is telling us that the stock market, futures fall as inflation rises by most since 1982. Apple gains after earnings, and Apple is up 2.62% for the day because of that. Microsoft 0.09%, Amazon 0.38%, Facebook's down, Tesla is down, Google is down, and it's just red, as you might have seen. Now it says your contracts on the S&P 500 fell, Dow futures decline, even the component stock Apple jump. Now listen properly. Only Apple, they only jump because of their quarterly sales that they have reported on. Robinhood says tanked after the trading platform missed on quarterly revenue as well. These are a lot of negative news that are coming out, and all of these things are just pointing at one thing: that is what it is. Inflation is coming, and the best way to take a look at what inflation could mean or look like by next month is to wait for the PMI data to come out next month as well. Now we can see here the yield curve is not doing too good as well, because we have to use this to measure how bond investors feel about risk. It cannot this the yield curve also has a tremendous impact on the returns of what investors could potentially make there as well. But I only looked at that for you guys just so that you can see how bad things are going at the moment. So definitely next week, today is Friday, so not much movement, but we can definitely expect next week some exclusive movement coming on the NASDAQ. We could potentially go into this consolidation phase here. This consolidation phase lasted almost 3 months. Now we could potentially see the NASDAQ just do that as well. But it's the best thing is to be reactive and not predictive, and learn to adapt to the ever-changing market environment. Now that's all from my side, guys. Keep safe, and as always, cheers for ears.